You are listening to the REI Mastermind Podcast. Join JD as he chats with industry-leading real estate experts and professionals. We learn from their experience and uncover the strategies to their success that we can implement into our own businesses, and we can drive immediate results today. They share their experience and wisdom as we build a foundation to our own success. This is the REI Mastermind Network.
We have Kevin Rodman here on the line with us today. Kevin, really appreciate your time. And this is a topic that I'm really looking forward to diving a little deeper because we have a lot of newer listeners to real estate investing. And we're going to essentially do a hard money lending 101 class here today. So people have an idea of what hard money lending is, how to make use of it, and some of those questions that they should probably be asking themselves and their potential lenders. But before we kick things off, I want to make sure everybody has your contact information. First of all, I believe your website is abl1.net. Is that
correct.
Is that one of the best places to get a hold of you?
Well, that's our website, and there's a lot of information there for new investors. So I suggest you go there and play with it and look for information. But the way to get in touch with me is my email.
Sure.
It's my initials, kr@abl1.net.
Sure. And don't spam his email now.
Correct.
Well, I appreciate your time today. And like I said, we have a lot of newer to real estate investing listeners. So let's start things off by helping them understand what hard money lending is and how they can incorporate that into their real estate investing goals.
Well, hard money lending, it covers a somewhat broad spectrum of the type of lender, but it's an alternative to a bank. A bank takes time, slow to close, does a lot of due diligence, digs a lot, wants you to prove your income. When you have construction draws, they could take a week to review it and ask questions and fund it. A hard money lender is somewhat more based off of the asset. We don't underwrite the borrower as deeply as we underwrite the underlying real estate. Sure. And the other hallmark of what we do is we close fast. At ABL, our average time to close is 2 weeks. Last week, I closed the deal in 2 days. In order for that to happen, the borrower came with clean title, insurance, and all of his documentation ready to go because he got frustrated with another lender. So it's usually a high touch business. I speak directly to borrowers, even though we've done almost over $700 million in loans in the last about 5 years. Even though it's asset-based lending, and it relies more on the value of the real estate. I don't want people to think we don't look at the borrowers. We do. We pull FICOs. We look at 2 years of income taxes, and we pull a background report, and we have a in-depth conversation with the borrower, mostly to determine, does the borrower know what they're talking about? So what's the proposed project? And before we get on the phone with the borrower, we'll research that house and that market, and we'll have a good idea of whether, and the borrower would have had to submit a draw schedule or scope of work for the renovation. So we'll have a good idea, but we still want to get comfortable with the borrower after we've gotten comfortable with the real estate.
Sure. Could you talk a little bit about like what are those things that you're looking at regarding that real estate, that house that a person would need to be aware of?
Well, the most important thing for the borrower and ABL is that you buy the house right. Mm-hmm. That means you buy it at the right price.
Right.
And generally, especially if you have new people to real estate on the phone, on the program, buying on MLS is generally full price. Mm-hmm. You're not gonna find some diamond in the rough on the MLS. So over 60%, we have over 500 borrowers in our book right now, in our portfolio. We're a direct lender. We have $100 million in capital. And 60% of our borrowers are repeat. And those borrowers are professionals, and they know how to find houses. They've got real estate agents who might find them a property before it's listed. They go to courthouses for auctions. They have connections with banks for short sales and REO. One that's rare, but we find often is a hoarder house. Most people, when you see a real hoarder house, it's shocking.
Mm-hmm.
You could get 3 dumpsters to clean out a 2,000 square foot house.
Mm-hmm.
Stuff piled up to the ceiling, and you just can't. Some people can't envision what it could be, what a professional investor does. So the most important thing is, to answer your question, is buy the house right. So then, once you buy the house, the investor, without our help, has to figure out what's the house going to be worth if I fix it,
mm-hmm.
and what does to be repaired. And so there's small renovations that are for a typical home of say 1,800 to 2,400 square feet. Small renovations are redo the kitchen, redo the bathrooms, maybe refinish the floors and some paint. That might be $25 a square foot. Then you get into slightly bigger renovations, which would include siding, roof, and windows. Now you're in for maybe $50 a square foot, maybe $40. And then there's bigger renovations where you're replacing the heater, adding HVAC, doing a bunch of electrical work. If you're putting in HVAC, you might be putting in duct work. Now you're getting into $70 a foot. Mm-hmm. So the investor has to figure out, how do I make the most money? Do I do the $30,000 job, the $50,000 job, or the $70,000 job? And in order to figure that out, you have to know the local real estate market. So there are some markets where you just have to have central air conditioning to get the right price. Often, you need 2.5 baths, not 2 baths. And you almost always need a new kitchen if you're buying a house that's got a dated or beat up kitchen. Kitchens sell a home. And honestly, bathrooms sell a home. Sure. Then it's pretty easy to refinish the floors. So the investor has to decide which way they're going to go. How big a renovation? If I do the $80,000 renovation, do I get paid back all of that, and maybe it sells the house quicker than the $30,000 renovation? And so those are decisions to make. Then you get a scope of work. You should have a contractor or interview 2 or 3. Get a scope of work, what it's going to cost. Then you come to ABL. Now, during this period, you'll be working with one of ABL's salespeople, and they know the regions. They know, just like myself and my partners know, every town that we lend in and what the markets are like in those towns. And our salespeople have more time to talk with a potential borrower and talk about what we think might sell in that market. But really what they need is a real estate agent, the investors. They need a real estate agent to guide them and tell them, you got to put in central air. You need a second bathroom. Sometimes in lower middle income neighborhoods, we might see a 70-year-old Cape home where there's 3 bedrooms upstairs with one bathroom, but no bathroom downstairs. Mm-hmm. And well, what does that mean for resale, and what would it mean if I put in a half bath? So those are the types of things you have to figure out before you present a real loan opportunity to ABL and you want ABL to lend you money. Hope that answered your question, Jack.
Yeah, no, yeah, it does. What is interesting is that you're pretty much painting a situation where you could really use your hard money lender as one of those team members to validate a few things.
Well, we are a local lender. We lend in 10 states. Most of our lending is in a state that touches the Atlantic Ocean. And that's because we've been around for 10 years, and we're based in Jersey City in New Jersey, and we started just lending in New Jersey and New York. And then we added Connecticut, and then we added Pennsylvania, and then we added Delaware, Maryland, Virginia. We recently added Rhode Island, Massachusetts, New Hampshire, and along the way we added Florida, which has become one of our biggest markets. Our value, our mantra is lend in areas that we know. I don't know how to lend in Kansas. I don't know the market. Lend in markets that we know, and we know those markets. And so we're a high service, somewhat lower volume shop than if you go online and you see national lenders that lend everywhere. They're not going to give you the service. They're not going to hold your hand like we will.
Sure. So just as a reminder, everybody head over to abl1.net for more information. And as Kevin mentioned, there's quite a bit of information out there for you there. And it's great to see a lot of those resources just available for people freely on your website. When you're doing your due diligence on a property, then what are you looking for? Like apparently there's going to be comparables and what can the neighborhood and the market support, but what are some of those due diligence items that you will be asking for?
Great question, Jack. So the way the process works is my salesperson works with a potential borrower to put a submission together for the loan. And that's going to include a signed purchase contract, a scope of work, and a borrower experience worksheet. So what else has the borrower done in real estate investing? And then they submit the package for underwriting. So then I pick up the file to take a look, and I spend, and by the way, there might be more information in there that the borrower has submitted, like tax returns maybe, or survey, other things related to the property. So the first thing I do is I take a look at the property address, and I go on Google and I pull it up. And there's a remarkable amount of information on Google. Mm-hmm. So I look at the house. Sometimes there's photographs of the house online inside. I then look at the street view. How does this house compare to the other houses on the street? Then I zoom out and take a look at the town. Where is the town in relation to other towns that we know? Where is it in relation to New York City or one of the cities in Florida or Boston, whatever state we're looking in? Then I take a look at the scope of work. I already know from looking at the house what I think it's worth, because we just know the markets. And we know what sells. And then I look at the scope of work, and based on what I'm seeing online, does the scope of work make sense? And we've underwritten thousands of loans. So then when we get into the scope of work, if it's a house that's going to sell for $350,000, it doesn't need a $20,000 kitchen. Mm-hmm. So if there was it needs $10,000 kitchen. So if somebody put a $20,000 kitchen and line item there, I would know there's a serious problem. Either the borrower doesn't understand what they're doing, or they've got a contractor who's trying to steal money from them, or it's going to be one or the other. Same with bathrooms. A $300,000 house, the bathroom could be around $5,000. Master could be $7,000. And same thing. I go down, I do a quick scan. Siding for that house could be $6,000. The roof could be $7,000. in those ranges. And so if it all looks good, and we also have a profit calculator, but we take a look at assuming an average hold time, which pre-pandemic was 10 months to get a project completed and sold.
Mm-hmm.
And that timeline actually had been lengthening over the last few years. It was 8 months, 2 or 3 years ago. And there's a lot of reasons why things were getting a little bit longer. But post-pandemic, 6 months, everything's moving in the suburbs. Inner city, Brooklyn and Bronx, different story. If you're in an inner city market, those markets are not selling as well right now as suburbs because people are getting out of the cities. So we run the calculator to see how much profit the borrower has built in. We have our own policy, which is a borrower has to make a minimum of $25,000 profit after all expenses, or the lesser of that, and 10% of how much they're spending. So if they're buying it for $250 and putting in $50, so it's $300 deal costs, then they have to have $30,000 profit based off of probably we'll put in a 7-month hold time. So that's what I look for. And then I get on the phone with the borrower and introduce myself and start asking questions. I ask the borrower to tell me about themselves. What do they do for a living? Do they have any partners in the transaction? What's their FICO score? How much money do they have in the bank? How much money do they make? Have they set up an LLC for the property? How do they know the contractor? And describe the project. Mm-hmm. And the borrower has to sound like they really understand the project. That to give me confidence and my partners confidence that they're going to execute, because we're in this together. It's not adversarial. Really, we're partners. Mm-hmm. We want to just make our money back from the loan, make our interest, have the house pay off so we can put the money out again. And we want to help the borrower get it done. Borrower wants to get it done as fast as they can, sell the house, make their profit, buy another house, hopefully finance with the ABL. So we're all aligned together. And ABL, out of our 3,000 loans, we've only had problems on about 80 to 100.
Sure. So it sounds like, outside of, you talked about the statement of work, you need the address, maybe some tax information. What, like your ideal applicant, if they came in fully prepared, what would they have in hand for you?
Purchase contract,
okay.
a well thought out scope of work, an experience worksheet that we would give them a form where a template in Excel where they would put that in, that's really all. This is hard money. Hard money is fast. So that's really all we need to get on the phone with the borrower, talk about the deal, and give them a decision on the call. It's either, okay, sounds good. Everything you said sounds good. So we're going to move forward. We're going to send you a term sheet. And if everything you told me works out, we'll do this loan. But there's a fair number of steps between what I just said of sending a term sheet and closing the loan.
Sure.
And we can go through that if you'd like to, process from term sheet to close. But the most important thing, there's two of the most important things that happen. First is the appraisal. So once we've issued a term sheet, we order an appraisal. The appraiser, and we have appraisers in every county, and we move fast. And our appraisers are hard money appraisers, and they know we have to move fast. So we send them the order. The appraiser will call the borrower, set up the appointment. Usually happens within 2 days, maybe 3. The appraiser has the scope of work, so they know what's being proposed to be renovated in the house. And they meet the borrower and the appraiser at the property. And the borrower then pays the appraiser, typically $450 for the appraisal when they meet. And the appraiser then with the scope of work, has the borrower explain the project. So they hear it. And then the appraiser will walk through the house, photograph everything, photograph the entire exterior, photograph the street view, go back to his office or her office, and within 48 hours, send us an appraisal report. That's a report that says, if the borrower does all these repairs, the house is going to be worth X. Mm-hmm. And that's the biggie. That's the biggie. So if the borrower came to us and said, I'm certain this house is going to sell for $350. I have a real estate agent. I have comps, comparables that, other sales. I know the neighborhood. I've done this before in this neighborhood. That's great. If it comes back at $350 and we had priced the deal for the appropriate profit margin, and say the borrower is borrowing on that deal maybe $275, so they've got $75,000 baked in. I'm sorry, they're probably borrowing more like $250 because they're spending more than we're lending. Mm-hmm. Then that's 85% of the deal right there. All that's remaining is some paperwork. It's pretty standard, like the LLC formation documents and operating agreement if there's more than one person, and the title report and credit. So credit's the next really serious one. Borrower, I'm always going to ask the borrower, what's your FICO? Borrower says, my FICO is 700. Borrower gives us authorization to pull credit. We pull credit. If it comes back at 700, that's great. If it comes back at 600, that's a big discussion. Mm-hmm. Comes back at 650, usually it's because of high credit card balances. Not a big deal. We'll probably proceed. Comes back at 600, that's a challenge. Sure. So there's a FICO discussion to be had, and then there's the bank accounts. The borrower might need $40,000 for this deal. To show $40,000 the down payment, cover the first draw, pay for closing costs. So they have to show us bank statements that show that they have the cash to close the deal. And then the title report is the final thing. It's always the final thing. The borrower has to pay to have a lender's title report. It means there's a title company that's ensuring that when we make our mortgage, we're going to have a first lien, and no other entity like the county or the state looking for taxes or another mortgage lender has a lien in front of ours. Mm-hmm. The title insurance, the purpose of it is to guarantee the lender that we have a perfected first priority lien in the property.
Sure. So, and I probably are going to say that it likely depends on the property, but what would you typically see for terms, and how is the money utilized? Like, if I buy a property, I know that it comps out. If I get it all repaired, it's going to be worth $250,000, but I'm buying it for half that, $125,000. Mm-hmm. What would somebody typically see, like regarding the purchase price, and then how does the funding work for the rehab?
Another great question, Jack. So every lender has somewhat different rates, points, and proceeds that they lend. And it also varies depending on the experience of the borrower. So as borrowers get more experience, they get lower rates and more proceeds, higher leverage. Mm-hmm. So our rates range from 9% to 11%, and our points range from 1 point to 2 points. So our borrowers that are doing 10 deals a year are getting 9% and 1 point. Meaning if the loan is $200,000, that's $2,000 they pay us in upfront points. And a borrower that's never done a deal before is getting 11% and 2 points. Okay? That's the range. It's a pretty tight range. It's actually much tighter than it was years ago, where new borrowers might have had to pay 13%, 14%. The market's, gotten tighter. And then there's proceeds. So for somebody that's never done a deal before, we cap our loan at 85% of their deal cost. So if their purchase, in your example, is $125,000, and their rehab is $50,000, I'm making numbers up. I have to pull my calculator for this, Jack. That's $175,000. So our maximum proceeds would be $148,000. So, but from that, we subtract the $50,000 for the construction escrow, which means we would come with roughly $98,000 to the close, and the borrower would have to come with roughly $27,000 down.
Sure.
And that's an important concept of most hard money lenders. It's very core to our culture, which is what we call skin in the game. How much cash does the borrower have to put in this deal so it's enough to incentivize them to get the deal done?
Right.
Because obviously, if we went 100%, they could just walk away. It's like they've got no skin in the game. So, and that's a big lesson learned from the Great Recession of 2007 and what went wrong with the mortgage market is borrowers were getting 95 and 100% loans, and then they all just walked away. So we've learned our lesson, and now we require borrowers to come to the table with some cash.
Sure. We talked about what your due diligence would be on a property, but let's spend in the last few minutes we have talking about the due diligence a borrower should have. Like, what kind of questions and what should they be asking for from a potential borrower or lender?
Well, what's they asking from a lender? Oh,
yeah.
Okay.
Just to make sure that it's a good fit for them, there's a lot of.
Sure. So number one is, are you a direct lender or a broker? A direct lender like us generally keeps the loans in our portfolio. And that means we have a lot of flexibility because nobody else is telling us what to do. A broker is going to send the loan to some other firm. And you might be getting into a situation with a lot of unknowns.
Right.
There's a lot of good brokers out there who broker to good firms, and then there's other situations. So direct lender, that's number one. Number two, how fast can you close? Is this going to take me 2 months or 2 weeks? Because my seller told me I have to close in 2 weeks. So like, yes or no, can you close? And then take a look at their reviews on the web. ABL has hundreds of reviews, and 98% of them are great. And so are the reviews online consistent with what the person you're talking to is saying? Are you certainty of close? That's the number one thing our borrowers are looking for. Can you close? Okay, so are you how broker or direct lender? Can you close? Tell me about the closing process. Is this going to be somewhat easy, or is it going to be really painful? And how are you going to make this easy for me? And what's it going to cost me to close? What are all my costs? ABL discloses it in our term sheet. Every cost we have is there. Are there any other costs that you're not telling me about? Okay. Then when am I going to get term sheet? When am I going to know exactly what you're offering me? Mm-hmm. And is the term sheet going to change? Are you going to change the deal at the last minute when you know I have to close? Right? Are you going to raise my rates? Are you going to, what are you obligated to do? Mm-hmm. And the truth is, any lender can change anything at any time. But check out their reviews online, because lenders who do that, well, it shouldn't, honestly, it's up to, are we going to have a trusting partnership or not? Mm-hmm. So those are the big questions that, and some other questions borrowers ask is, should I hire an attorney? And the answer is yes. Mm-hmm. We think you should hire an attorney, and we're never going to advise you otherwise. Because right. If we advise you not to, and everything gets screwed up, borrower is going to say, but you told me not to hire an attorney. Mm-hmm. But in addition, ABL has a closing attorney. They're not part of our company. They're external. We have attorneys in every state. And so our borrowers have to pay the attorney's cost. It's one of the biggest parts of the closing costs. In Florida, it's $500. But up here in the Northeast, it ranges from $1,000 to $1,500. Mm-hmm. So it's a significant part of the closing cost. And another question borrowers ask is, should I order the title report or will you? And our answer to that is whatever you want. Mm-hmm. We have a title agency that we work with. We don't have an ownership interest in that title agency, and we don't think lenders should have ownership interest in title agencies because it could be somewhat of a conflict of interest. But some do, and it works okay. And typically we tell borrowers to go out and order your own title because we think it's the right thing for a borrower to have freedom to choice.
Sure. Well, the last question I have for you then is there a question you wished I would have asked you here today?
You've really covered it well, Jack. I can't think of anything right now. Okay. And do your lender to the people listening. Do your lender due diligence. There's a lot of lenders you can find on the website out there. A lot of lenders paying for paid ads, and then there's the organic. ABL, we're proud. We've been around so long. We're near the top of the organic search in every state. So what does that mean? How do you get there? Well, you get there by having a lot of people land on your webpage and use your website. Mm-hmm. We're proud of that. But do you want to work with a lender who's only been in business for 2 years, right, or 1 year? So check out your lenders, check out their reputations, talk to a few of them, interview them, and that's my suggestion. And see if they're helpful. Mm-hmm. See if they can tell you about the market that you want to be in.
No, that's a great advice. As much as anything, I keep seeing everything as just adding another team member, and you need to make sure it's a good fit.
That's right. You really do.
Well, again, if you want to hear more from Kevin, head over to abl1.net for more information. I really appreciate your time. This has been a great session, especially long overdue hard money lending 101. And I really appreciate the insight and help.
Thank you, Jack. Thank you to everyone who's listening.
This has been the REI Mastermind Network. You can already tell that we've made some changes, and a few more are on the way. If you are interested in what we have planned, head over to patreon.com/REI Mastermind and support the show today. Financial contributions are always appreciated, along with a like, share, and review. It really helps us grow and reach more people with this valuable information. See you next time, and tell a friend.